Yeah, good afternoon, everyone. On behalf of Equirus Securities, I welcome you all on post-result conference call of Rolex Rings Limited. From the management side, we have Mr. Manish Madeka, Chairman and Managing Director, Mr. Mihir Madeka, Whole-Time Director Marketing, and Mr. Hiren Doshi, CFO. Without further ado, I hand over the call to management for their opening remarks, post which we'll open up for Q&A. So Hiren, you can go ahead.
Yeah, thank you. Good afternoon to all of you. Thank you very much, Equirus team, to arrange a post-result announcement call. First of all, I would like to acknowledge the overwhelming response what we got during our IPO subscription. We are very much thankful to the investors and more particularly the shareholders who got the allotment, and we are going to just commit them that we will be doing our best to get the maximum and quite positive output from our business. Would like to brief you about certain thing of our business. That we are producing bearing rings and auto components. When I say bearing rings, these are the inner and outer component of bearing, or rather you can say a first component of bearing. We supply these bearing rings to all global multinationals who are into manufacturing of bearing. Apart from that, we have also diversified into auto components business, wherein we are supplying to few of the OEMs as well as tier 1 supplier, tier 2 suppliers of OEM. In the auto component segments, we are there from say two-wheeler segment into passenger cars, then into commercial vehicle, light commercial vehicle, heavy commercial vehicle, off-highway vehicles, windmills, industrial suppliers, and all these things. Same way, we do have quite versatile range in terms of bearing rings also. We are one of the top 5 forging companies in terms of capacity in India. We have accumulated a manufacturing capacity is 1,44,750 metric ton precisely, of which we can achieve almost in between to 75 to 80% to the best possible of product mix, as the range of the product what we are producing is quite wide. When I say in terms of bearing ring, say a component of inner diameter of 20 mm bore to more than 900 mm outer diameter product what we are offering. Same way in terms of weightage, from a 10 gram product, single product, to 163 kg single component we are able to produce. That kind of manufacturing capabilities we do have. Apart from that, we are offering other than the forging, we are offering the many value-added processes till the level of final machining as well as grinding, heat treatment, and so on. At present, company is having 22 forging lines, which consist of high-speed hot formal lines from Japan and Switzerland, then rolling lines from France, then high-volume component line from Japan also. Apart from that, we do have a quite huge machine shop, wherein we are consisting more than 528 spindles, through which we are able to offer a value-added process of final machining and so on. The manufacturing capabilities, as I told you that in Rajkot we do have 3 manufacturing plants within the periphery of 2 to 3 kilometers, and wherein all these facilities are integrated and where we are just currently operating. Company is having a quite versatile customer base, as I told you. The revenue of the company is almost 60% from overseas and balance from the domestic market. When I say bifurcate into the bearing rings and auto components, again 59% is something from bearing ring business and 41% is from auto component business. The customer profile what we do have, the product range what we are able to offer, and the value-added processes what we are able to offer. These kind of manufacturing capabilities under one roof, definitely it's not available in India, and we are the top among all as far as the facility manufacturing capabilities in the addressable segment is concerned. Would like to tell you that the bearing industry, there are main 5 players, bearing manufacturers, who caters almost 80% of domestic market. Fortunately, all these 5 players are the customer of Rolex, and we do have a quite long association with these customers, which is more than 10 to 15 years. Few of the customers, again, it is more than 2 decades we had. The advantage is certain. What we do have is locational advantage, as we are the western part of the country in Gujarat. As you people are very much aware, the infrastructure facility is quite good. The resources as far as the electricity and labor, which are the key resources for me, those are also uninterruptible. And we do have a quite good access for the port availability, where from our Mundra port, Kandla port, from where we do our majority of the exports. Apart from that, company has also installed 8.75 megawatt windmills, through which they can compensate its power requirement to the extent of almost 15% of overall power requirement. Besides that, company has already initiated to put the solar rooftop plant, which has already been commissioned, and the generation got started also. And the company has initiated for the ground mounted solar project to the extent of 16 megawatt. From now to down the line 1 year, we would be having entire 16 megawatt solar plant would be available, which will reduce drastically to the extent of 30-35% of my power cost. Would believe that power cost is one of the major costs from next to raw material in our manufacturing process. So company is always in process of getting the better yield, to optimizing the equipment efficiency, to get the maximum capacity utilization to the extent of the product range. And our concentrate is also there to strengthen our bottom line as well as top line. So these are the certain cost reduction measures and market development what we are doing. We have a good base as far as bearing rings and auto components diversified into auto component, into overseas and domestic market. Nowadays we...
Yeah, yeah, you're audible now. Please go ahead.
Okay, I'm sorry because of some technical glitches, but I don't know, Ashutosh, from where I was cut off. So if you can, what were done, because I was continuing talking.
So you're talking about the customer basically in domestic market, top 5 customers, the 5 forging companies are large customers.
Yes. Okay. So we do have a strong customer base in domestic as well as in overseas market, where we are associated, or rather we have relationship with those kind of customer, which is more than 1.5 to 2 decades or so. Certain customers again beyond 2 decades or so in domestic as well as overseas market. Apart from that, I was telling that company was very much concerned about the utilization of capacity, about the cost reduction, about the maximum yield of the product, and even for the strengthening the bottom line more. Company has installed windmills for 8.75 megawatt. The power which is generated over there, those are compensated at our manufacturing plants. Apart from that, company is in process of installing ground mounted solar project to the extent of 16 megawatt, which is to be operational partially by end of this fiscal and partially by the first half of next fiscal. The power cost is the major cost next to the raw material. So the company would be a post installation of this entire 16 megawatt. The company would be able to save more than 30% into their power cost, which will definitely quite strengthen my bottom line. Apart from that, company has already installed 1.5 megawatt rooftop solar plant, which has already operationalized, and we are getting the output and compensated our electricity cost. Further, as most importantly, I would like to tell you that company has already started supplying the certain components which are to be used for electric vehicles. So company is looking a good opportunity, great opportunity in terms of components manufacturing for the electric vehicles, because the facility what company have, the forging lines as well as machining lines, where they are quite flexible in terms of producing bearing rings, auto components, and even certain components for the electric vehicles. So company is having quite good expectation for the EV market also. As the penetration will go up, definitely it will give us more business we expect from the overseas clients as well as maybe from a domestic one. The we have on the Saturday only we have disclosed the first quarter numbers. As we told even earlier our virtual presentation that we would be surpassing the numbers what we had in 2019. We are on the track. The quarter one numbers has already almost 8% has grown with compared to the last quarter of FY21. The company has recorded. At the same time, the EBITDA has also increased what it was there in March 21 quarter. And the same we are expecting on a quarter-on-quarter basis to the extent of 7% incremental revenue on Q-on-Q basis. So definitely we would be having a new milestone in this particular fiscal what we had in 2019. We are quite hopeful to touching the revenue top line of with the 4 digits. That is all a brief about company as of now. Again, I would like to mention one small thing, that company is also concentrated on just repay its long-term debt, and maybe by December end or in the first quarter of March 22, the company would be paying entire CDR debt and it would be a long-term debt free. Though we had a small term loan what we raised in the March 21 quarter, particularly in the last 10 days of the March 21. That COVID loan, it would be there on the balance sheet, which is hardly 28 crore, and that would be repaid in the next 4 fiscals. That is the brief what I would like to inform. You people must have seen our numbers, must have got the quarterly numbers. I request Asutosh or Equirus team that we can open a Q&A session.
Thank you, Hiren sir, for the opening remark. Ladies and gentlemen, we'll begin the question and answer session. Anyone who wishes to ask a question can use the raise your hand option. Ladies and gentlemen, we'll wait for a moment until the question queue assembles. Yeah. So our first question is from Sonal Gupta. Please unmute your line and please go ahead.
Sure. Good afternoon and thanks for taking my question. This is Sonal from L&T Mutual Fund. Sir, first thing, like you've given the percentages as a percentage of product revenue sales. So could you tell us what was the product revenue sales for the quarter?
Yeah, say as far as the bearing rings are concerned, it is 59% of my revenue, and auto segment it is 41%. Again, in terms of segmentation for the overseas and domestic, overseas business is 58% and domestic is 42%.
No, sure. That is mentioned in the presentation. What I was asking is that because you mentioned that is X of scrap, etc. So I wanted to understand that your net sales is to 227 crores. How much of that is product revenues, which are like how much is scrap basically and others, scrap and others? So what is the net product revenues of which you've given the presentation?
Yeah, for the quarter, scrap revenue was 14 crore, 14 crore. And the remaining is my product revenue. That is 210 crore. Apart from that, we have export incentives and windmill income. So all put together is 229 crore. 230 crore.
So, sorry, the windmill revenues are in other income or is it in other operating income, which is part of your net sales?
No, it's there on the numbers what we have given. That is part of 227 crores.
Yeah, so scrap and then the other operating income, windmill, etc. What is the total for that?
That is 227 crores, sir.
No, sir. So what I was trying to get is what is your product? You've given that my exports are 58% and India is 42%. So what is these numbers are calculated as a percentage of which number?
Yes. So you want to know the component sales, which is 210 crore, and the balance 17 crore consisting of my scrap sales, export incentives, windmills, and windmills. That is there.
Okay. 210 crores is the number, right?
Yes.
Okay.
Which was vis-a-vis in March 21 quarter, that was 191 crore.
Okay, and would you be able to 191? Okay, and would you be able to give that number for then the so 191 crores, that makes sense. And just so how best should we look at this business? Should we look at it on tonnage basis or something? Would you share tonnage for the quarter? I mean, just trying to get a sense of how best to look at this.
Sir, definitely tonnage is one of the aspect. It's not only the tonnage, it depends on the value additions what we are giving. There are certain products, a big component do not have much value addition, do not have much critical operations. So those things also needs to be considered, because wherever the value addition is more, the critical operations are more, there the margins are definitely a bit on a higher side. Let me tell you, say for example, electric vehicles, the component what we are producing, having couple of additional processes and the tolerance level, etc., is quite on a lower side compared to the normal catalog products or something like that. There we have, definitely a good margin or rather better margin.
Okay, sure. And so for Q4, could you give me the mix of how things were, like between Indian exports and between bearing rings and the others, auto components?
Q4 more or less it is same. It was 58 and 42%, something like that. 58 was export, domestic was 42, and again auto bearing ring was somewhere about 58%. Auto segment is 41.5 or 42%, something. Yes. Okay,
so similar.
Yes.
Okay, and just lastly from my side before I get back in the queue, so India. Largely the revenues in India are from bearing rings, or is there a meaningfully large auto component also?
Yes, definitely. As of now, it is largely from domestic market, that is from bearing ring. But let me tell you, say for example, before 1 year back, we had hardly less than 5% in the auto segment presence in domestic. Today, in this first quarter, my domestic presence for the auto component is almost 12%. So it is on the increasing trend. Couple of new customers what we have added, further it would be giving me an additional revenue. But much chunk of these my revenue, it is from the bearing rings.
Okay, great, sir. Thank you so much. I'll join back the queue.
So the next question is from Mr. Nilesh. Please unmute your line and ask your question.
Hello, am I audible?
Yes.
Yeah, hi. Thanks for the opportunity and congratulations on your maiden results and a good set of numbers. So just I had a quick question on your P&L. So I just noticed that the interest expense during this quarter was about 6 crores. So I recollect last year, full year was about 12 crores only. So and directionally your net debt has been declining only. So what's the reason for this?
Yes. See, there are 3-4 multiple reasons for that. First of all, as I was mentioning during our earlier talk, in the month of March, that is somewhere about 22nd of March, if I'm not mistaken, we have raised COVID loan. So in my last quarter, there was no interest cost for that portion, which is there in this entire quarter, which is to the extent of 28 crore. You may say it's somewhere about 0.6 or rather 6 million interest. Apart from that, as now we are following Indian accounting standards, Ind AS, we have to categorize my finance cost, the forex fluctuation under finance cost. Let me tell you, in last quarter, what we had notional entry as on 31st March 21, the same has been reversed on the very 1st April of 21, and again in 30th June, I am supposed to provide a new notional entry. Let me tell you, in March 21, there was a gain for this forex fluctuation, which I was accounted as a revenue in March 21, but it came to my debit of the P&L in the April 21. Again, on June 21, we had that figure negative, which is a loss on foreign currency, fluctuation of foreign currency on my interest outstanding of my working capital, which is again somewhere about 3 million. So these both put together, almost 1 million has debited into this numbers. 1 million is this. And apart from that, as I told you, that 6 million interest, so 1.6 million interest has added because of this. Again, there are, as you better know, that we are carrying non-convertible preference shares on my balance sheet. So I need to provide a notional, that interest cost on that, which is a, compounding financial instrument, what we have displayed in our balance sheet. So those notional entries to be added in the cutoff period, 30th June. So all put together, somewhere about 22 million interest cost has been increased because of these things in this quarter.
Got it. Got it. So your core interest at with whatever long-term debt you have is would be the remaining, is it 4 crores approximately?
No, my long-term interest cost is hardly 1.5 odd crore.
Yeah. So 6 crores you said, out of 6 crores, 22 is because of this forex fluctuation and
and this notional entry.
Okay. So are there any other those export related costs like those guarantees and those which are also part of this?
No, we didn't have any kind of such arrangement, sir.
Or
no guarantees, no LCs, nothing.
LC cost. That is what I was referring to. Okay, got it.
That is for the import of this thing, not for anything. So because almost 25%, 27% of my purchases are from import. So there we do have LC cost. But which is generally in the range of, it's a 100% variable or an operational curve.
Got it. Fair enough. Maybe I got some sense. Maybe the other aspects I'll check with you later. And the second question was on the current capacity utilization levels. How are you placed? I mean, in terms of broad level, and in terms of just one more is this you mentioned that you received some new orders during this quarter. Maybe you can just throw some light on that too.
Not exactly new orders, something what it has been already awarded in the last year only, but the revenue has started, bulk revenue has been started dispatching in this quarter with a couple of customers like one auto component manufacturing plant just recently before 1.5 years back, it was commissioned at Hosur. So there we are supplying key transmission components. So those have started. Again, as I told you, that electric vehicle, it has an incremental supply of 30 odd percent, 25-30% of what we had in earlier quarter, and same it would be increasing.
Got it. And on the I got it. And on the capacity utilization?
Capacity utilization as of now for this quarter particularly, we are almost 53 to 54%.
Okay.
Yes.
Got it. Fair enough. Yeah. That's all from mine. Thanks a lot. And all the best.
Thank you.
Anyone who wishes to ask a question can use the raise hand option. Yeah. So the next question is from Nikhil Jain. Please unmute your line and ask your question.
Yeah, thank you. Thank you for taking the question. I just wanted to understand what would be management guidance for this particular year, let's say in terms of our top line. So we will be going ahead the 2019 number comfortably, or we'll be reaching that number. So that's what I want to understand. Thank you.
Yeah, it will be more than 19 figure. It will be more than 4 digit.
Okay. Okay.
Yeah, we are targeting, sir, as we have already recorded revenue of 231 crore in the first quarter. And as I was mentioning, we expect 7% quarter-on-quarter incremental revenue for this next 3 quarters.
Okay. And today, let's say next question would be, say, out of our total product sales of around 210 crores, what would be the percentage that is coming in from the electric vehicle? I understand that it may be small right now, but what is it right now? And what may be, let's say, management's view or let's say aspiration over the next 3 or 4 years to take the organization towards?
It may be more than 4% at present. And going forward, it will be approximately 10% on the total revenue.
Okay. Sure. So
yeah, again, it depends on the how the penetration on EVs are going to, because we got mixed opinion that maybe in certain developed countries it is moving fast, and where certain it is just gradually. It depends on the how it would be penetrated. Yeah.
Right. And yeah, maybe if I can ask one more question. So on a fundamental basis, so in an electric vehicle, with the number of machining components be lower or higher than, let's say, a regular our conventional ICE vehicle? And so what is?
Yeah, definitely. See the number of components. Let me tell you, say for example, in a 4-wheeler today, maybe 16, 18 odd numbers of bearings are required. These number might be reduced, or rather it would be reduced in the electric vehicle because of the removal of engine and all these things. But the components which are required to be used in EV, as I was also mentioning, those are with the highly precision, this thing with a couple of value-added processes also. Quantum in terms of value, that might be near to the, as of now, what the total cost of components we are using in our regular vehicle.
What we heard from our customers, the more penetration will be of hybrid car, and then it will be converted into electric car. So going forward, hybrid car penetration will start, then electric car penetration will start.
Right. Sure. Okay. Fine. Thank you, sir. Thanks.
So next question is from Mr. Sonal Gupta. Please unmute your line and ask your question.
Yeah. Thanks for taking my question again. Sir, just wanted to get better sense on the domestic side, like 41% of your revenues are coming from the domestic and mainly coming from the bearing side. So in this, could you sort of explain a little more in terms of which applications is it going for? Because you are supplying to people who already have 80-90% of the domestic bearing market. So are you into specific applications for which your bearing rings are being used, or are you supplying across the board? I think in the opening comments you mentioned that you also supply for 2-wheelers, etc. But could you sort of give us some more sense on domestic bearing, which applications they're going into?
See, most of our customers now have started their plant for the import substitute. So out of that, only one has ramped up their production, and other 2 are new. So they are also trying to ramp up their production in India. And that segment is not for automotive. So these are for large dia bearing. So mainly used in railway, then steel plant, industrial application, wind turbine. So that segment, now our customers are growing, they're increasing their production. So they have already put new plant. So there we have a potential to get the new business. We have already started getting the business, and from the last quarter of this month, we will be adding one more customer for such large diameter bearing. And apart from that, now there is a generation 3, it is called generation 3 bearing. It is a combination of bearing and wheel hub. So that also we are getting more, we have started getting more revenue from this segment also. So these are the 2-3 sectors where we are expecting some.
Right. So I mean, these I guess are the new growth areas. But currently, I mean, if you were to sort of split India bearing revenues into auto and non-auto, would you be able to do that?
Let me tell you, so there are a couple of customers in India to whom we are supplying bearing rings, and maybe if both these customers, if I'll take, it would be somewhere about almost 12 to 14% of my total revenue. But these customers are completely out of auto segments. Right. And as we were mentioning that wheel hubs, even certain, Korean company having base at India, they are sourcing these wheel hubs, and in turn they are exporting for the particular OEM. So that demand has also growing up. But as you were just asking in terms of the bifurcation of auto and non-auto for the domestic bearing ring market, I would like to say somewhere about 60% something would be there in the auto component, or rather the auto related this thing, and balance would be other applications, that is railway, wind turbine, industrial application, and so on.
Okay.
Talking about bearing rings only, sir.
Right. Sure. Got it, sir. And thank you. That's very helpful. And just on the interest cost, I mean, you gave some explanation. So what sort of interest cost and debt levels do you expect by the end of the year?
By the end of the year, as I was mentioning to you, my long-term debt, apart from that small loan what we have taken, that would be out of the balance sheet, or rather we are going to repay, and hardly even in last week only I have already paid 9.5 or something. So now it is somewhere about 14.5 or something is remaining onto my books, which I would like to repay by December or so. As far as my working capital is concerned, we do carry that working capital for our better flow of the business, because business are growing, and as you better know, in the overseas we expect much growth, and where my involvement of working capital would be on a higher side compared to the domestic one. And where the working capital cost is, as we have in foreign currency, it is less than 5% or even less than that. So broadly, if I tell you, the term loan interest cost would be somewhere about 6 to 7 odd crore something for the entire year, and working capital again to the tune of not more than 1.2 crore or something like that per month. But when we just going to have the annual numbers, definitely these notional entries will make certain change.
Oh, okay. And sorry, and what was the FX number that I missed that part? You said there were some FX fluctuations which are there in the interest cost.
See, as I was telling you, my 80% of working capital that is there in the foreign currency. As you better to know, before 2 years back, whatever the fluctuation, I do, borrow my pre-shipment facility into dollar. Then again, it is backed by, discounting, and I'm getting that revenue from the customer. It would be set up like that. So prior to 2 years back, whatever the gain loss because of this timing gap of, say, from the date of pre-shipment finance to post-shipment finance, that was considered or accounted as a forex gain loss. And from now, or rather from last year onwards, it has been accounted, or rather it has been stipulated to accounted as a finance cost of the company. That is why it has added to the finance cost. And on every cut-off date, I need to, as you better know, that mark-to-mark entries. So whatever my working capital outstanding as on that book, the gain or loss of that amount also needs to be accounted as finance cost. So it would be reversed on the very first day of the next quarter, like that.
Got it. So what was the number? Sorry, could you repeat the number for this quarter?
For what?
For the gain loss on the FX side, which is...
Let me tell you. In the March quarter, there was a gain of somewhere about 8 million, right? It has reversed in the 1st of April. So again, that has been booked as an expense in this thing. And in the end of June, again, it got, because of currency fluctuation, 4 million or something has been added. So you can say 1.2 million of this working capital forex gain loss is accounted in this 67.06.
So in this quarter, only 4 million impact, right?
No. I'm talking, it is 67, sir. What we have, June quarter I'm talking for.
No. So June quarter, 67 is the total, million is the total interest cost, out of which the FX impact is only 4 million, right?
Yeah, FX impact, not 4 million, sir. It is almost 10 million, as I was mentioning to you. It was reversal of last quarter as well as added of 30th June. So both put together, it is almost 11 million. Apart from that, as I was also mentioning, that we do carry, as we were adopted Indian accounting standard in the March 21 financials. So whatever the non-convertible redeemable preference share was there on the balance sheet, we need to, bifurcate that interest cost and as an other comprehensive financial instrument. So that also needs to be accounted notionally, though it is not supposed to be paid, but it is to be accounted as an expense.
Right. So how much is that impact? Like
somewhere about 3 million.
On a quarterly basis, that will continue.
Yes. And one more thing is also mentioned that we had this small term loan in the end of March quarter. So the cost of that term loan was not significant or very marginal in the March quarter, but it was there for the entire quarter. So that is somewhere about 6 million odd. So all put together, 21, 22 million something is for these kind of numbers.
Sure, sir. Sure. Great. Thank you so much.
So the next question is from Mr. Nikhil Jain. Please unmute your line and ask your question.
Yeah. Thank you. Thank you once again for taking my question. So just one question. So right now the company is in the CDR, which we are saying that we will get out of CDR by the end of this financial year. So what are the current constraints that we have because of CDR? And once we are out of the CDR by end of this year, so what sort of flexibility we will get and how are we planning to use that flexibility?
See, once we'll be out of CDR, definitely the certain relaxations what we had in terms of overall, interest cost, that would go to in line with my credit rating and so on. But at the same time, we do have opportunity to explore our working capital requirements with the other banks, maybe with the private banks, where we are expecting quite better terms in terms of interest and in terms of services. That is the benefit what we are expecting post CDR.
Right. Okay. And one last question. So out of our total capacity of around 145,000 metric tons, so what is the current capacity utilization, if I may ask?
As I was mentioning to you, it is somewhere about 53-54% for this particular quarter.
Okay, sure. Thank you. Thanks.
So the next question is from Mr. Sonal Gupta. Please unmute your line and ask your question.
Yeah, sorry, on the last question, sir, just wanted to understand on the gross margin or on the raw material cost side that has gone up this quarter to about 45.3. But still your margins are pretty healthy and have improved. So how do we understand? I mean, do you see more raw material cost pressure given that steel prices, etc., have been going up? Or any thoughts on the overall margins? Do you think this quarter levels are sustainable?
Definitely, we do not foresee or other pressure on our margin, because whatever the raw material pricing fluctuation are there, that we do have 100% pass-through mechanism with our all customers, whether it is domestic or overseas, both. So there would be a bit of timing impact would be there, but it will not have a significant impact. And as I told you, say for example, the material price has gone up by 10 rupees per kg. So it would be available to me for the stocks what I am carrying for that particular customer, the stock which is in transit, the stock which is lying at the warehouse, and the stock which it was there at that premises. So in all these numbers, I am going to get the incremental pricing. Something what I have already produced, on that also I am going to get the incremental price benefit. So definitely we do not foresee the margin pressure because of commodity fluctuation.
Right. And overall, this margin this quarter has been very strong at around 23.6%. So you think that sort of a level is sustainable? Anyway, your revenues are going to grow quarter on quarter. So I guess there should be more operating leverage as well, right?
Yeah, definitely we are expecting, but let me tell you that it would be in the range of this thing only. There is no question of going down, but our margin would be ranging somewhere about 22 to 23.5%, 24%, something like that. It would be ranging. There are a few percent portion would be which is not controllable in terms of fixed cost as well as variable. But definitely we are expecting more than 22%. That would be the consistent margin. And it is there even in my last quarter of last year. And even we got these kind of numbers in 2019.
Okay. So is this because it will depend on your export mix, etc. That is higher the export mix, the better the margin. Is that?
Mainly it is related, first of all, with my capacity utilization. As I told you, that we'll get a good amount of fixed cost absorption. That is one of the things. Definitely exports, we do have better margin compared to domestic because the majority of the export products are having value-added processes and critical operations. So we would be having, and again, export incentives are there.
But incentives as of now you're not getting, right? The RODTEP.
No, we do get duty drawback.
Okay. Got it, sir. Thank you so much.